Imagine you're at the gold rush. Everyone is racing to dig, picks flying, shovels hitting dirt, men beating everything on finding this stuff, gold. Now, who actually got rich? Not the miners, the people who sold the picks. That's SLB. And before you watch a single second of today's earnings coming up very shortly, we're going to cover it live. You need to understand why. What matters more than almost any other number on the screen. Because here's the thing, most investors look at SLB and think oil. They don't understand it. We're going to cover it all live for you today. Oil company, they're wrong. And that mistake is costing them. It's costing them a ton of money. Stay with me. We've got the earnings. We've got 10 facts. Get ready. It all comes up right now. What a day this is going to be. You've now got a few minutes to click share, like, and put this out to your friends. Those watching it later, you can skip through this little bit. This is where we get excited. Are you ready? Let's do it. Let's get straight into it. I'll see you back in a second. It's a big day to make some money. Here we go. Good morning, everybody. Imagine you're at the gold rush. Everyone is racing to dig. Picks are flying, shovels hitting dirt, men beating everything and betting everything on finding gold. Now you actually got rich, but who got rich? Who made the real money? Well, it's not the miners, the people who sold the picks. That's SLB. We're covering SLB live on the show. We've got a special guest coming straight in. This is live, unedited, unscripted. Let's welcome our guest. Here we go.
At Potato Family 3,958 tipped $1.99 through Super Chat.
Yes.
Bloody hell, I am excited. Here are the facts on SLB.
Absolutely. This is going to be a big day today. We are covering the earnings live. So what you need to understand and why that matters more than almost any other number that you're going to see on the screen. We're going to cover SLB earnings very, very shortly, because here's the thing that most investors look at with SLB. They think about oil. It's an oil company, but it's much more than that. They're wrong. And that is a mistake. It's costing them. So stay with me through all 10 facts today before we get to the earnings live itself. I will be coming to my members live in the chat. No one gets left behind. It's a huge day today, a huge milestone. Can anyone guess what has happened today live on the show? Put in the chat if you know what milestone we've just hit. It's incredible. It blows my mind. I wonder if you can guess. Anyway, 10 facts today, because fact number 10 is the one the smart money already knows. You need to wait for that one. And once you hear it, you'll never look at energy investing the same way again. Let's build this from the ground up. Shall we make a start on fact one? Well, before we do, let's invite everyone to tap the like button. This is live, unedited, unscripted, whole production done by myself, what takes a team of editors to do for every other channel on YouTube. But we're YouTube TV. We do things live, unedited, as it happens. Join us, click subscribe and be part of it. So who is here this morning? Let me bring you on the screen. We got Javal. How are you? Hello all, and how are you this morning? Hey at Banana Heads. Nick Jones, thank you very much. Super chat as well from Potato Family. This is Potato Family's request. If you remember, you can book an earnings call. It's now $20. You can get one of these full facts earnings calls. I mean, it promotes the stock and everything. Not bad, eh? For $20. Okay. First come, first serve, by the way. All right. Okay. Now then, has anyone guessed? No one guessed what milestone we've hit this morning. We're coming up to fact number one. Come on. What do you think happened this morning? It's blown me away. Morning from Oregon. We have Oregon is in the house. Good morning to you. No one guessed it. I'll come back in a minute and see if you got it. All right. So let's get straight into it. This is fact number one. The foundation of SLB was founded in 1926, originally called Schlumberger, named after two French brothers. You need to understand the history. You need to understand what the business is. That way you can make money and you don't have to sell and get worried and concerned when the market goes up and down. We buy businesses here, not stocks or tickers. Two French brothers, Conrad and Marcel, who pioneered a technique to measure what was happening inside an oil well using electrical currents. Pretty exciting, right? Think about that. Nearly 100 years ago, and the core idea still powers the company today. This isn't a startup chasing a trend. This is an infrastructure. This is a bedrock. When markets panic, when oil crashes, when geopolitics explode, SLB has been through all of it multiple times. That kind of institutional memory doesn't show up on a balance sheet, but it matters. It really does. And I'm going to explain it. Has anyone worked out what milestone we had? That was fact number one. Please tap the like button if you want to be part of it and share it out to your friends, and consider subscribing would be fantastic. Okay, so here we go. Let me go into the chat and see what you said. Morning from Oregon. Hello, says Liz from Germany. Is it your 21st birthday? Probably not. No idea. No idea, says Starflight. Good morning, everyone. Crazy night last night here. I'm okay with tornadoes. Oh, God, I'm not okay with it, mate. It's bloody horrible. We have tornadoes here in Texas all the time. No, nobody guessed what it was. Well, let me share with you. Before I go to fact number 2 for our SLB earnings. At 16 years of age, I left home with no money. This is not generational wealth, as some of my trolls will say. I did everything for myself. I left home at 16 with no money, and I worked and I built my own business. That's it. I only had 2 weeks in my entire life of unemployment benefit because someone advised me I had no gigs in January, so why don't I get sign on for some free money? I was bored of doing it. It was stupid. Did it for 2 weeks, never did it again. So I've never been unemployed other than 2 weeks. I've done the same job for 41 years, broadcasting, entertaining, like I'm doing right now. The same thing. No one has ever taken care of me. I've never received a windfall, inheritance other than $1,500 from my mum when she died. Nothing from my dad. Didn't get a free house. Didn't get a free car. Did it all for myself, literally by working dollar by dollar and never giving up. Okay? That's how I did it. I built 4 successful YouTube channels. I built I toured the whole world with One Night in Vegas, my theater show. And 4 years ago, I started here with $5,000. That's it, $5,000. And through no options, no shorts, no gambling, no guessing, just by going to work every day, showing up no matter what, earning, but ultimately investing in owning businesses, not stocks, not shares, not speculation, not gambling, but businesses. Why go into an iPhone shop and buy an iPhone every year when you can own the shop, own the business, and get all the iPhones you want for free? That's the way I look at investing. That's the way I look at business. So if you told me 4 years ago, this number would show up in my portfolio, I would have fallen over. I made an insane prediction of getting to $1 million by the end of the decade. We've got, 4 years to go? 2026, 4 years to go. Remember, what you're seeing on the screen, folks, is not just income. Even though income is important because I show up, I go to work, I do my thing, so I earn money just like everybody else, all right? Let me show you the 1 year. 1 year, 30% just by buying the S&P and Coca-Cola. There is no wins or losses here in my in crypto. This is just by buying with conviction. Well, today I can tell you, and I'm sharing it all with you because this aims to be the most honest, real, live YouTube channel in the world. Today, my Roth IRA, all my stocks, all my shares, all my debt of margin, all my outside borrowing, all brought in gives you my net worth. That's it. So all the debt, that's negative, all the pluses, all together today, live on the screen. I cannot believe it. Look at this. And anyone can do this. Just work, invest, stay in the game. Let me share with you live on the screen. Look, I'm going to my app in real time. There it is. Let me do my face. There it is. Here is my net worth today. Can you believe it? It's a milestone for me. I cannot believe it. I'm a man come from absolutely nothing. Nothing at all. I just worked $701,000. $1 million now is in sight within 2 years. I cannot believe it. Now, when you look at that and you go, it says 12% up all time. That's because I only started tracking this a few weeks ago. All right. It hasn't had the chance to grow yet. This is just my balances put in. This is tracking all my debt, all my credit cards, all my margin, all my investment, Roth IRA, the whole kit and caboodle. 701. I cannot believe it. This is what it is to be an investor. This is what it is to understand compounding. Own the business, stay in the business, never give up. Can you flipping believe it? I can't believe it. I can't believe it. Well, I kind of can, but you know what I mean? My mum and dad would be like, what? We never even saw that much money. There it is. There is my net worth. Okay. Let's carry on. This is all about SLB earnings. So we're doing the SLB earnings. Blows my mind. Anyway, every one of you can do exactly the same thing. So let's carry on. Fact number 2. Let's read the comments before we go into the chat. Let's have a look. Good morning, everyone. The Big Burn crazy night last night. Martyn Whiskey. Not today. It's too early. A lot of views on YouTube. What do you mean, Javil? What's a lot of views? What do you mean? Trump wants the 60 billion barrels of oil reserve in the sea around the Falkland Islands. I've heard now Donald Trump wants to go to war with the United Kingdom. Can anyone work this out? Donald Trump now wants to go to war with the United Kingdom. He wants to take the Falkland Islands. I am beyond measure of belief. I don't even want to talk about it anymore. It's just getting beyond comprehension now. All right, we've got basically a dictator. We've got worse than Putin now. It doesn't represent America. It represents one person. I'm not even going to comment on it. It's ridiculous. Anyway, Martyn, you need a whiskey or tea for your throat. I'll be all right, mate. I'll be all right. You probably have a good chance to hit your goal by the end of the year. Oh, I don't think so. 700 grand. I can't believe it. Hit the like button, says the Big Burn. Martyn, you are worth so much more than 700 grand to all of us. Well, that's incredible. I appreciate that. Shall we move on to fact number 2 for SLB? That's why we're all here at the end of the day. Let's carry on. Please tap the like button. Here comes fact number 2, and this is an important one. Number 10 will blow your mind, and then we've got the live earnings coming up very shortly. So here we go. The picks and shovels. It's all about the picks and the shovels. Let me be very clear about something, because this is where most people get confused. SLB does not produce oil. It does not own wells. It does not pump barrels. It does not profit directly when oil hits $100. That's confusing, right? What it does is sell the technology that makes finding and extracting oil possible at all. Seismic imaging. This is what it's about. Drilling systems, well construction, formation evaluation. Now you're understanding the business a little bit more, right? So when we get to the earnings call, this will make a whole lot more sense. Reservoir performance, the stuff that happens before the oil even flows. Are you loving the sound of SLB already? I would say so. Picks and shovels in a gold rush. The miners need them, whether they strike gold or not. This is the new gold rush. SL gets paid either way. It makes no difference to SLB whatsoever. How about that? Fact number 2. Did you like that? Please tap the like button if you like that one, and consider subscribing. This is what this is all about. Let me go now back to the live chat and welcome everybody in. We've got Jerry Copeland. Good morning to you. We've got, wouldn't be much of a war. We got no military, says Victoria. I mean, it's ridiculous. Good morning, everyone. SBUX price target. Thank you, stock. I can't share that on the screen. I'm afraid you're not one of our members making predictions like that. Okay, so let's go to fact number 3. Now, this scale is staggering. The scale is staggering. Fact number 3, let's get straight into it. Here we go for SLB. Just 1 hour to go now before the earnings. What a morning it's going to be. Over 100 countries, more than 80,000 employees, operations on every continent except Antarctica. So when you try to picture this, understand this: SLB isn't just operating globally, it's embedded globally. Their people are on platforms in the North Sea, in the deserts of Saudi Arabia, in the deep water rigs of Brazil. It sounds like a song, that, doesn't it? It does sound like a song. In the shale fields of West Texas. This is not a company that participates in global energy. It is woven into the fabric of it. Think about this, folks, for a minute. You probably thought that SLB was just an oil company. There's so much more to this. And when you hear the earnings today, you understand exactly what you're owning. And that is the secret of my portfolio looking like that. If you want all of my trades 24/7, one-on-one support, I offer that for a couple of bucks. I don't charge thousands of bucks like everybody else. I don't need to. I actually make money doing it. So if you want to join me on Discord, I'm going to be there after this twice a day for my pro members. There's Discord, 90% off, just a couple of bucks. Go pro, it's the best way to go. 24-hour access, direct messaging me, all my shares traded, shared 24/7. Literally, 3 o'clock in the morning, I share my trades with you. Answer questions live, no AI, no bots, just me, and you get access to Sensei's daily news. You can learn how to read charts. I mean, it's phenomenal. A great team. Best Discord server in the world. No question about it, just the same as our channel. So if you'd like that, it's in the chat. It's also below in the description of the video. If you prefer YouTube Electrum, I share my trades on YouTube, plus you get all the YouTube live streams, members benefits, perks and benefits, live streams, members only videos, all that stuff. And guess what, folks? There's never, ever going to be a price increase, ever. There's going to be no inflation, ever. So it gets better every year and effectively gets less expensive every single year. How about that? Not bad, eh? All right. Fact number 4. Are you ready? Smash the like button. Let's get straight into it. Here we go with fact number 4. SLB, the retail driver of revenue. Here's something that surprises investors every earnings cycle, and they miss it on every earnings cycle. SLB's revenue isn't primarily driven by the price of oil. It's driven by activity. Specifically, how much money energy companies are spending to explore and drill for oil. These are the two very different things. Oil at $80 a barrel, but with companies spending aggressively on CapEx, SLB wins. Oil at $95 a barrel, but companies are cutting back, spooked by uncertainty. SLB feels it. Watch exploration budgets, watch rig counts, watch E&P capital expenditure plans. That is the leading indicator, not the oil price headline. This is important to understand. We're going to go straight on now to fact number 5. Number 10 is going to blow your mind. We've only got 1 hour to go before the earnings call. Get ready. Here comes fact number 5. The digital revolution nobody is talking about in this sector. They're not. You go on social media, you search around SLB, no one is talking about the digital revolution around SLB. This one tends to catch people off guard. In fact, I don't know anyone who ever talks about this in the chat or with me on my social or in Discord or whatever. SLB has been aggressively building a digital division, AI-driven reservoir modeling, automation of drilling operations, cloud-based data platforms for energy companies. Their platform, Delphi, essentially gives oil companies a digital twin of their entire operation, letting them simulate decisions before making them in the real world. That's not oil services anymore. That's enterprise software inside energy. Why does this matter for earnings? Why am I even talking about it? Why do you even care? Well, because software margins are fundamentally different from service margins. As this division grows, it doesn't just add revenue, it changes the quality of that revenue. higher margins, more recurring, less cyclical. This is the sleeper story inside SLB that most energy analysts aren't fully pricing in yet. Important, right? You agree? If you agree, let me know in the chat. Tap the like button. Let me now go back to my subscribers and see what you're saying in the chat. People are saying Coca-Cola. Well, what do you mean? I don't even need to look. I don't even need to look. I know what Coca-Cola is going to do. I don't need to look. But shall we? Shall we? Oh, there we go. What a surprise. This is what you do as an investor. You don't need to look. You bought the business. You own the business. I own the business. I've got now 700 grand. In fact, more than that now, right? Let's go over here. Let's see what my wealth is worth now. Let's have a look. The full balance. Boom, 701. It's about to hit $702,000. Nearly all of it is in Coca-Cola and the S&P 500. Don't tell me you can't make money owning Coca-Cola and the S&P if you buy it a great business at the right time. That's what we teach every day on my Discord server and on YouTube Electrum. You can't beat it. I don't even need to look today. I don't eat. It is exciting though. I'll give you that. I'll give you that. It is exciting. But you know what, guys? It hasn't even started yet. This is absolutely nothing. You know where Coca-Cola is going? $90. And if it does, I'll be touching $1 million. I mean, it's going to be pretty exciting. And it's like it can go there in minutes, really. Anyway, there you go. It's not about the stock price. It's about the business that you own therein. Okay, shall we move on to fact number 6? Let me go to the chat. Diesel Raider, bloody hell, Coca-Cola. Yeah, Coca-Cola is going nuts. It is not wise to keep buying Coca-Cola. Oh, is it not wise to keep buying Coca-Cola? Well, I can't. I've bought every penny. I've bought every inch of the company I can afford. I've got every penny. I haven't got a penny left, but I would be buying it. Absolutely. If I could buy some more today, I would buy some more today. Absolutely right. Meat margin. Meat margin. What do you mean meat margin? SB. Oh, meet Martyn. Oh, I see. Meet Kevin. Meet. I got you. SBUX. 102. I can't share these comments because you're not a member of the channel, I'm afraid. So I can't really talk about that. SLB. Let's carry on with our next fact for you. We've only got 58 minutes to go, less than that actually, before the earnings call, and we're going to cover it live. What a day this is. Going to get rich today, folks. All right, you're missing all of it. If you're not on Discord, you're missing all the trades, all the information shared everywhere. Every single day, directly from the sources. Okay, fact number 6. Tap the like button. Let's get straight into it. Offshore is where the margin lives. Not all drilling is equal. And SLB's profitability reflects that. Offshore deep water projects, the ones happening miles out at sea, thousands of feet below the surface, are exponentially more complex than onshore shale. The technology required is more sophisticated. The expertise is harder to find. The equipment is more specialized. That complexity is SLB's profit engine. When offshore activity rises, and we are in an offshore upcycle at the moment, right now, SLB's margins expand. They work. The work they do offshore is hard to replicate, hard to price shop. And I understand that theory because that's what I do. I built the machine that builds a machine. It took me 2 years to build this studio to be able to go live in a way that no one else can do. All right? Doing what's hard will always win and outperform because people are essentially lazy. Businesses want the easy route. Those that succeed do the hard things, and they do what nobody else does, and they do it better than everybody else. So I understand SLB's strategy and philosophy here. It's great. I love it. And it commands a premium rate. So watch the offshore segment in the earnings today. When they talk about it, look out for these things. Watch the offshore segment, specifically in today's earnings. That's what you got to look out for. The purpose of these 10 facts is to show you all about the business, but also explain what to look for when we get to the earnings call. And that's where the margin story lives. That's how you make money with this business. Okay, back to the main portfolio, back to the questions. Fact number 7 is around the corner. Were you able to get your account to buy Coca-Cola? Oh yes, that's why I'm up so much today. That is why I'm up so much today. At 4 o'clock this morning, it arrived in my Lloyds Bank in the UK. Yeah, all that money. That's why I'm up so much today. And I then transferred it into my Robinhood UK account within seconds. I bought Coca-Cola within seconds, and you can see the benefit for that. That's being reflected. That's being reflected in this total wealth. This is the UK account as well. 701,770. The 701,817. We're going to $1 million live on the show. Are we going to hit 702,000? Can you believe this? Can you believe it? So yet this morning I bought Coca-Cola. I didn't care. It was, there we go, 702,000. Another all-time high. I'm loving it. Can you believe this? So yes, I bought Coca-Cola, even though it was 2% higher than a couple of days ago because the bank slowed the money and I lost money. I don't care. I want to own the business. And I own the business. 700 grand, 702. Look at it go. I can't bloody believe it. I can't bloody believe it. All right, let's get back to our SLB. This is our, look at it. We are, and this is all Coca-Cola today. I told everybody, I told you, I teach it every day in Electrum. I teach it on Discord. I do my best every day, live every day, 2-stage events. If you want to join me on Discord, don't miss another trade. For a couple of bucks a month, I can't believe I don't have 112,000 subscribers on Discord. Mind you, I wouldn't accept that many anyway. We couldn't do it. But I can't believe we haven't got more. We've got 680. All right, we're virtually at capacity anyway, so I don't even know why I'm mentioning it. I don't need to really. Okay, fact number 7. Volatility is not the enemy here for SLB. Volatility is not the enemy. Tap the like button. Let's get ready and consider subscribing. Here we go. Here we go. So volatility is not the enemy. Here's a counterintuitive truth about SLB. The world's crises, energy shocks, supply disruptions, geopolitical conflict, production cuts, these events tend to increase demand for exactly what SLB does. Why? Because when energy supply gets tight, governments and companies don't slow down exploration. Right now, we've got YouTube in a downturn. People are watching less because of ChatGPT. The markets haven't been great. People have been giving up. What am I doing? I'm working harder. I'm implying more technology. I'm doing more research, providing better content, doing more, buying more of the business. I'm digging deeper. That's what you do. That's what businesses do. They don't slow down. They do more. They accelerate. I'm accelerating. I adopt the same strategies in business as SLB does right here. They need to find more. They need to produce more efficiently from what they already have. They need technology, the favorite word for our friend Zachzai. Ukraine, Middle East instability, OPEC decisions, these things that rattle oil markets, they often create a longer term tailwind for energy services companies like SLB. Chaos creates revenue. That's not cynical, it's structural. Think about it, folks. As SLB goes up, Coca-Cola goes up, my portfolio goes up. This is how you make money. I share it every day on Discord. There's the link for Discord. Join me. It's in the chat. It's pinned to the top below in the description. And also there is the membership link as well. I do the same thing on YouTube Electrum. So shall we go into fact number 8? We're nearly there with the most important facts, 8, 9, and 10. And then, of course, we have the earnings call itself in just under 50 minutes from now. We're going to cover it live. What a day it's going to be. So fact number 8, here we go. Tap the like button. This is the geographic edge. Understanding the geographic edge. Here we go. This is the one most retail investors completely misunderstand, miss, and I never hear anyone talking about this on my social media platform, in the chats, comments when I cover SLB. SLB doesn't depend on any single region. Not the US, not OPEC, not any one government or market. Middle East accelerating investment, great. We love it. US shared activity slowing. They have Latin America ramping up. North Sea pulling back. Africa is expanding. If one geography hits a political wall, another is opening up. This is called geographic diversification. We spoke about it yesterday. I explained this very analogy with Coca-Cola yesterday. Hardly any of you paid attention to it, but look what happened today to Coca-Cola. Trying to explain this every day. All right. So geographic diversification isn't just a talking point in their investor deck. It's an actual structural buffer against regional risk. So when you're analyzing earnings, look at the regional breakdown. The mix shift between geographies tells you a lot about where the growth cycle is heading globally. You need to understand these things when you are buying a business. And SLB has got it in spades. Let me now come back to the chat and see what we've got. I can't believe it, says This Way Gaming. I love it. Selling tax lot KO. I'm early exit, I'm sure, but I'm taking profits. Nothing wrong with taking profits. When you sell, I shall buy it from you. Absolutely right. I cannot wait for my next round of dividends. We're approaching $2,000 a month now. Sell it to me. I'll buy it from you all day long. And there's the man. There's my mate. There's my pal. There's my friend from Israel, now living in California. Technology. That's right. That's right. Zach Zai understands it exactly. Don't forget Netflix. Everybody wants entertainment. TN, we could review it for you, but you need to be a member. We can cover the earnings and give you 10 facts you've never heard so you can win with Netflix, but you have to be a member. Here's my mate. Holes in the phone booth. All that I knew was the hole in my shoe, which was letting in water, letting in water. All that I knew was the hole in my shoe, which was letting in water. Name the singer, name the TV show in the 80s from the UK. Best TV show ever. Name it. In the 80s, what TV show in the UK? All that I knew was a hole in my shoe, which was letting in water, letting in water. You wouldn't believe I was a professional singer, would you? All right, here you go. Holes in the phone booth. Best show ever. Right, fact number 9. We've nearly got to the big event, the live earnings for SLB. Let's look at the portfolio. We don't need to. We don't need to. Are we there yet, Mum? No, we're not going to be $1 million today, but we're getting very, very close. We're getting very, very close to $1 million. Let's have a look at it. Let's enjoy it. Let's enjoy it. 701,814. We're 868. Nearly there. Nearly 1 million. 4 years ahead of schedule. All right. We're not going to do it this year. It's 2 years. I'll beat it by 2 years. Anyway, let's carry on. SLB, fact number 9, the revenue visibility most companies would kill for. Absolutely right. This is how you actually make money and understand the business. Tap the like button. Have you done it? Okay. Have you subscribed yet? Okay. Have you got on Discord? At the end of this, before the earnings call, I will onboard everybody that wants to be on Discord. So you don't need to miss another trade, another training course, another event, another explanation of how all this works, live one-on-one service. There's Discord. There's Electrum. If you want to follow me on X and Instagram, by the way, I'm now going viral on Instagram. It's kind of cool. I'm really enjoying it. I've never been viral before. I'm going viral. Oh my God. Anyway, here we go. Fact number 9. Companies would kill for this. We're talking about revenue visibility. SLB operates on long-term contracts, multi-year agreements with national oil companies, super majors, independent operators. This isn't quarterly spot business, but a meaningful chunk of SLB's future revenue is already contracted, already visible, already on the books. For an investor, that matters enormously. It's the difference between a company guessing at next year's revenue and one that can see it coming years in advance. So when you hear management talk about backlog, that's important. They'll mention it on the call today. Let your ears prick up when you hear that. Or activity commitments. Those are the signals that tell you the foundation under future earnings is solid. So get ready for that, okay? Very, very important. Well, we made it, folks. You made it with me. We are now down to fact number 10. This is where it gets interesting as the earnings call is only 45 minutes away. We're going to cover it live. As you can see, the stock is going up. No surprise whatsoever because this is the best review of SLB in the world, right? Tap the like button, share it out. Are you ready? Okay. Let's get ready. Let's have a look at my portfolio. Are we rising? Yes, we're rising. Yes, we're rising. We're rising. We're getting close to $1 million live on the show. We're not there yet, though. Here is fact number 10, the final one before the earnings call. Tap the like button and consider subscribing. Let's do it. The one that you cannot ignore. And if you do, well, it's up to you. I don't care. I'm gonna focus on it. We've been building up to this all the way through. Have you felt the tense? Have you felt the building up? Have you felt the excitement? Have you felt it? You should feel it because SLB is going up on it. We've been building to this all the way through for an hour now. Everything I've told you about SLB, the global scale, the technology, hey, Zachzai, it's back. The technology moat, the offshore margins, the digital division, the contract visibility, it all points to one underlying thesis. SLB is not leveraged to the price of oil. It is leveraged to the demand for energy, which makes it, in my book, a perfect business to own. There you go. And those are not the same thing. Oil price speculation is a trade. Whoop-de-doo. Energy demand is decades-long structural reality. No surprise SLB is moving now. The International Energy Agency, OPEC, the EIA, they all agree on one thing. Global energy demand is rising, not despite the energy transition. Partly because of it. Building solar farms requires energy. Building EV infrastructure requires energy. What about Vaz and his EVTOLs? Requires energy. What about Sensei and his Bitcoin and his crypto? Requires energy. Powering data centers for AI requires energy. The developing world industrializing requires energy. Every one of those trends increases the total amount of energy the world needs to produce. And the more energy the world needs to produce, the more critical the technology again, Zach, that makes production possible becomes. So SLB doesn't just participate in this story. In many ways, they enable it. This is not an oil company. This is infrastructure for the global energy system, and infrastructure, real infrastructure, compounds over time. There you go. This is the best review, the best build up to an earnings call for SLB in the world. Smash the like button. Consider subscribing. You've never seen anything like it. Let's be honest. Tell the truth. You've never seen anything like it. So when we go live today for the earnings call, which we will very, very shortly in about 40 minutes, don't react to the revenue beat. It's not about the revenue beat or the miss. Don't just react to EPS. Don't just focus on the stock price. Ask yourself the deeper question. The same way as I do, and that's where I get this. I buy great businesses. Great businesses. I mean, look at Coca-Cola today. It's going to $90 because I understand the business. People are selling it right now and I'm buying it right off them. I can't believe it. Plus the dividend. Right. Anyway, so SLB is pumping right now, but it literally, right? But don't focus on the price. Focus on owning a great business. Is global energy demand still rising? Is it? Are companies still committing capital to production? Well, are they? Is the offshore cycle still in an upcycle? Well, is it? You should know the answers by now. I've just spent an hour showing you all about the business, making it easy for you to understand the business. Is the digital division still growing? Well, is it? Okay. If the answers are yes, you know now what SLB means and what it really stands for. You have the context that most people watching don't have. When they watch the earnings call, they won't have a bloody clue. You do. Lucasades and Discordians always win. Oh, we got a special comment.
At Sufi Yankan 4,966 tipped £1.99 through Super Chat. Where do you think Ethereum will be in 6-12 months?
Great question. Great question. I own a lot of crypto. There you go. There's my crypto, $45,000. Basically, I'm not going to give you an exact price. You're not one of my members. I have to explain it in deep dive in Electrum and Discord. But just as a general where we are now, I am in Ethereum. I've locked it up. I'm staking it. I'm in XRP and some Bitcoin. I expect all of it to double, okay, in the next 12 months. I expect all of it to double. I'm not going to give you an exact number right now without a deep dive explanation, but I will say that what you're looking at there will go to $100,000 essentially. And yes, that's what I think. And I know that by talking to those that actually move it. I have friends at Robinhood, friends at the banks, CEO friends, hedge fund managers, a White House press room contact. Yeah, absolutely. Unquestionably, oh my gosh, we could be, if this continues, we could go to $1 million today. Let's have a look. Where are we now? Where are we now? This is my True Wealth Tracker, 702. Oh my God, look at that. We could hit 100 grand. I know it sounds crazy, but we absolutely could hit $1 million now. I mean, I've planned this for 4 years' time. I then upgraded that to 2 years. 2 years, but it could happen a lot quicker than that now. All right, there you go. Anyway, fantastic. That's what happens when you buy businesses and understand true value of businesses. Coca-Cola is going through the bloody roof. There you go. Anyway. So watch out for all these things today. So anyway, I hope you enjoyed that. Did you enjoy it? Tap the like button if you enjoyed it. Let me know if you enjoyed my 10 facts. I'll do a little poll in the chat. Let me do a little poll in the chat. This is a new formula. I'm trying to bring you more information to help you make informed decisions, how to buy businesses, how to win, how to not lose, protect your money, to be successful, to always win. I always win. I always get it done. You can do the same thing. So these 10 facts that I'm bringing you before the earnings are designed to be my own thoughts based upon facts, principles that I follow to help you always win. So I'm going to run a poll right now in the chat. So start a poll. Start a poll. Why won't it let me do it? Why won't it let me do it? Hang on a minute. Start a bloody poll. What's going on? Oh, I've already got a poll. Is it a buy, sell, or hold? Okay, let me end that poll now. Undecided, 42%. Okay, let me do a poll now. No wonder I couldn't do a bloody poll. Start a poll. Do you like the 10 facts? Okay. Yes or no? As I say, they're designed to help you understand the business so you can win and all this stuff. And everything I do is my own research, my own work. I use AI to help me put things together. Of course I do, but it's all my own thoughts, all my own work. I spend hours a day researching late in the evening, early in the night to bring this to you. I create all the images. I use Photoshop to do it. When I put on the show, everything is happening live and there's no editing. There's nobody else here. It's all me. It's all rehearsed so I can deliver it in real time. So, okay, let's add this to you. Do you like the 10 facts? Let me see if you're enjoying this new concept of the show. It's designed to help you win. That's what it's all about. So if you could vote on that, I'd be interested to see what you say. All right, we are now half an hour to go before the event begins. You can see we're absolutely exploding. We got XRP coming down. We got the S&P coming down. We got VUG, which I sold at the top. I warned everybody about it. Coca-Cola is making me an absolute fortune, but there's not really any surprise there. Look at it. Look at it. Go straight up. Look at it. Oh my gosh. Can you believe it? So SLB, we got to keep that on the screen because it's the SLB earnings. All right. Let me see the poll. We've got 113 people watching. Not many people watching. They're not focusing on oil. They're looking at Binky Bonk and Fart Coin and how to get rich in 5 minutes. And they're missing the very right to make real money with a real business, which you see on the screen how it works. Okay, it's a great shame. Only 110 people now watching a real business that makes you real money. There. It is what it is. Anyway, so can everyone vote? There's 110 of you. Why are you all not voting? Tap the like button to the live stream. Consider subscribing. Right, what we're going to do now is we've got half an hour. We're going to go to live Q&A. We're going to answer everyone's questions. See, I told you the big burn. See, what did you tell us? See, why you say that like this, Martyn? Why you say that like this? I don't know what you mean, Liz. Can you rephrase that? I do like SLB. Yeah, SLB is moving well. Yes, it is. No surprise. The 10 facts are a bit childish. I'd rather you just drop the info. No need to number them and lose the effort of trying to round off the information. Mark Cade said the 10 facts are a bit childish. Okay. He's not a member of the channel, so there we go. I'd rather you just drop the info. No need to number them and lose the effort of trying to round off the information. Lose the effort of trying to round off the information. Okay, you're entitled to your opinion, but I am more concerned what my members think than someone who wants to troll the channel or say it's all rubbish. I want to speak to the investors, those that have the money, those that invest in the channel, those that invest in themselves. But I appreciate your comment. I'm sorry you don't like it. I don't know why it's childish. But anyway, and the reason why I number them is because there are 10 facts, not one, and I can then divide them up to shorts later because some people don't want to watch the full live stream videos, so I break them into 10 videos. They all go out as own little facts. That's why I do that. That's efficiency on my broadcasting style, that in the end, I'll have all these individual videos and so on. So I'm sorry you don't like it. This channel obviously isn't for you. And as not being a member would kind of explain that. Vertical makes us sad this week. Vertical, yes. Well, it's because of what's going on in the Middle East, I'm afraid. I did warn everyone. I did say to take the profit, didn't I? I said it's going to be very volatile. Take the profit. I did. You saw me make 20% in like 5 minutes from vertical. I exited that. XRP, where are we going, Martyn? XRP, I can see it going to $5, not 100 or 1,000 like all the idiots say. But yes, I can see it going to $5 and I'm holding it and I'm very happy with my position. Hitting 1 million by the end of the year. No, the plan was the end of the decade. Okay, the end of the decade. I then pulled that forward to 2028, 2 years. I'm ahead of schedule. I'm standing by that. I'm standing by that because we are going to have a recession. We are going to have a pullback. We are going to have a carry trade unwind. So I'm still standing by 2 years. Yeah. I talk about Coca-Cola. You expect the levels on 90 or still the end of the year because you talked about the million for you today, maybe. Yes, $90 by the end of the year, Liz. I didn't mean literally today. I was joking, Liz. Sorry for that. Yeah, $90 by the end of the year. Martyn isn't lazy like you. That's why we watch and invest. Thank you, Diesel Ray. That's very kind. Not childish at all, Martyn. Not childish at all. Thank you very much indeed. Yeah, I mean, everyone's entitled to their opinion. You know, we welcome everybody. I don't hide people. I don't block people unless they're rude. And if he wants to say I'm an idiot, it's okay. I don't mind. I don't mind. I mean, I've grown 5,000 to nearly $1 million. I don't care. Got 4 YouTube channels successful. You can call me an idiot if you want. It's fine. You can call me an idiot. It's absolutely fine. But anyway, where you see XRP today, I can't say, but I know it's going to $5. Doesn't matter where it's going today. Doesn't bother me. You had vertical 6 months ago. Yeah, I had vertical in and out. It's a trading stock for me. About a month ago, I had vertical for an hour. I made about 20% in an hour. Okay, thanks for clarifying. You're very, very welcome. Okay, half an hour to go before the call. There we go. We keep our eye on SLB. Just half an hour to go before we get there. Holding my shoe is from the young ones. Yay! I'm loving it, loving it, loving it. Let me just end that. I just realized that. I was just bugging me. Did I do the 8? Did I do? Yeah. Okay. Let me just check something. I've got to go and upload something now. So while we're waiting, what I'm going to do is I'm going to send those 10 clips, those 10 shorts that I made up to the short place. Right, the short place. So I'm just going to check my timings. Eight minutes. Okay, 8 minutes in. Here we go, 8 minutes. So I'm just going to send this up here now. So what I do later on, for some of you that don't want to watch the whole video, but you want the facts, what I do is I break them down into shorts for you, giving you all the facts that you need. Okay. That's going up there now. That'll be there shortly. And once the earnings call begins, I'll publish them and you'll see them. I have a short coming out across all my platforms every half an hour, 24 hours a day. I don't blast them out all in one go anymore. They come out every half an hour on my... If you want to see all the shorts, if you want to see all the facts and just nice, tight bulletins, you don't want to watch live streams, you don't want to watch hours and hours. There's Instagram and X, there's YouTube, everywhere there's these 30-second to 1 minute, all the facts broken down for you, and they come out every half an hour of the day, 24 hours a day. All right, so anyway, here we go. Let's have a look. We're getting a pullback now on crypto. We're not buying the pump. We bought the bottom. We don't need to. We're up 10% on XRP. We're up 13% on Ethereum. We've locked it up. We're earning 2%. We're up 16% on Bitcoin. We're not buying on the way up. Absolutely not. We are 7.5%. We're outperforming the S&P this year by miles, right? If we go, some of you don't believe me. You go, no, that can't be true. There's no way you're beating Warren Buffett. There's no way you beat the market. I beat the market all the time. Right, let's go to one year to date. Year to date on the S&P 500 is 3.48. The S&P is up 3.48. Oh, let me just do this. 8 minutes. Grab that to there. There we go. And let me get my clips. Auto clips. Auto. Clip length to 3 minutes. Let that get to work. Oh, we got a special guest.
At Cameron Griffin D2R tipped $2 through Super Chat. Is this what it's like in the Great Britain emoji? Texas weather lol.
Texas weather, we have tornadoes like can take your house down. We have hailstones the size of baseballs that can smash your roof. We've had 2 roofs replaced here, come through and kill you. It's quite scary. In the summer, it's like 120 degrees. It's insane. You can't. Mental. And when it rains like the bucket. A bucket's being just thrown over you. So yeah, it's quite dramatic weather here in America. In Texas, at least, anyway. It's pretty mental. Pretty mental. Anyway, so where was I? Yes. So the S&P is up 3.51 this year. That's the S&P year to date. Okay. If I go to my portfolio and I go year to date, let me go to stocks because you've got to compare it to the same thing. Year to date, there you go. Whoops. Hang on. Here we go. I am up 7.7. 7.7. So I'm not just doubling it because of margin. I mean, like more than double. So it's a win-win. You can see it right there. I mean, that's 7.7. Now, that's including all my positions, right? But if we go to the S&P, I'm also beating the S&P within itself because I know when to buy the bottom. I know when to sell. Don't just hold on to it. I always buy the bottom, right? So if we go to year to date, sorry, I beg your pardon. I'm showing you the year-to-date of the S&P. How can I show that? I want to show you. Oh, there you go. That's what I was trying to show you. I'm up 7.5% just on the S&P. Just on the S&P, 7.6, right? That's important to show you because that isn't the overall market. And I've only been in it, what, a month, 6 weeks, 7 weeks? That's because I sold at the top, bought it back on the dip, bought the bottom, and now we're up 7.5% in just 6 weeks on the S&P, when the S&P itself is only up 3.5% this year. So that's how you can consistently beat the market. You can beat Buffett. Remember, they can't do the things that we can do. Retail investors have way more power than all of these people. They're restricted to do things. We can do everything. This is why we teach you on Electrum and Discord how to trade, how to win, how to buy lots, and all the rest of it. And it's really, really that simple. It really, really is that simple. Anyway, Coca, look, we're all the way to $90. Right, let's have a look at the all-time wealth now. Here we go. Started with $5,000. We are now at, there we go, 702, nearly 703. Absolutely, but this is just, I'm trying to show you this to encourage you to own businesses, buy businesses, know how to trade, know when to sell. You can always buy the bottom. Don't worry about the top. There's no such thing as the top. No such thing as the top, is there? You can't there we go, another all-time high, 703. You can't predict the top, but you can buy the bottom. We do it all the time. All right? Anyway, let me onboard all of you now onto Discord. If anybody wants to join me. I mean, this week of all clouds. I don't know, really, Cameron. Here in Dallas, yeah, it's been a bit muggy, isn't it? Texas has a mental weather, but great food and country music origins. Yeah, I wouldn't say great food. I'm not a fan of the food, to be honest. It's all processed and it's all full of chemicals. To be honest, American food is just full of it. I just can't get food without chemicals in it. I'm not a fan of the American food, to be honest. Prefer Greek, Italian, French, European, Norwegian. Yeah, I mean, it's real food. It's just full of chemicals, I'm afraid. All logic. Can we do a stock request? I'm thinking of asking a review of MU, stock long-term growth. Yes, you can. If you want to. If you want to get it on top of the list, it's $20 if you want a full stock review of MU. You are a member, you can book that in. Martyn, one more question. I have been in the XRP since 321 on the up. I dollar cost average all the way to 133. Then we hit our peak this year. Is this true? Is this Is there truth to all these sub $1 calls out there? Absolutely. Absolutely. I say it myself. Absolutely, XRP can go below $1, right? I wouldn't dollar cost average either. I never dollar cost average. I sold the top and showed you how to use tax lots to buy the bottom and then post tax losses. So then you could end up buying back at lower prices and then having no tax to pay in the future on those gains. So I don't do tax. I don't do dollar cost averaging. I don't believe in it. People simplify it on YouTube. It's just a silly strategy. It's not what I do at all. I sell at the top. I use harvesting. I even sell lower to get harvesting to buy it back at the same price or lower with a tax benefit. But yes, it certainly can go below $1. Right, okay, we got 20 minutes to go. So we got time now to onboard everybody that wants to be onboarded into Discord. So after the show today, we're doing training, showing you tax lots, showing you tax harvesting, answering all your questions, one-on-one support. Just a couple of bucks. I could charge $1,000 for Discord and get it all day long, right? But I just want to help people as I make money from investing. So let's see if anybody joined this morning that wants to be onboarded. It doesn't look like it. That's okay. No, everybody is all taken care of. Okay, good. Let me check that. Yeah, no, we're all up to date on Discord this morning and Electrum. Good. Fantastic. Okay, so we got just 20 minutes to go before the call. Martin, one more question. I've been in XRP since 321. Oh, I've already answered that, haven't I? Did you repeat that again? I've already answered that. Yes, I've already answered that one. Okay, so what we're going to do now is we're going to take a very short break. Thank you, Lance. A very, very short break. Bring back real food. Yes. Yeah, just basically take the chemicals out. That's all we got to do. Just take the bloody chemicals out.
At Cameron Griffin D2R tip $2 through Super Chat. Bring back real food.
Bring back real food, yeah. Didn't answer. I did. Let me try that again then. I mean, with all the greatest respect, the Sarge, I have to focus on my members, okay? I have to focus on my members, but I will do my best for you, all right? So I'll try again, but, what you didn't answer, I don't understand. I don't understand the question now. I have only been in XRP since 321 on the up. I dollar cost average all the way to 133. When we hit our peak this year, is there truth to these sub one? I did answer that. Okay, I have answered that. Oh, I get it. Okay, good. All right. Okay. Right, guys, I'm going to take a 6-minute break. The build up for the earnings call. In fact, I'll make sure I get the earnings call fresh first before I leave you. I'm just going to go to the restroom, have a cup of tea, and we're right back for our earnings call. Here is the show tonight. We've got my event tonight on the music show every Friday night on YouTube live. We do the music show. Here it is. If you want to be the first person to leave a request, I'll post it twice in the chat. There you go. There's a show tonight, 4 p.m. Central Time, 10 p.m. in the UK, live tonight on the music channel. That's what I'm doing. We've also got a special event as well happening on Saturday, tomorrow. This is really special. Love the thumbnail. Absolutely awesome. We got a members-only event. For our man, Vaz, our EVTOL expert, he is doing this on a members special on Saturday, slightly later than normal, because he wants everyone to join in. We're going to have a cigar. We're going to have some whiskey. It's going to be fantastic. I absolutely love it. I can't believe it. We're going to do it. Big celebration. That's coming up on tomorrow. All right. So what we're going to do now is take a short little break. I'm going to get a cup of tea. We're going to keep it going. I'm just waiting 2 more minutes for SLB to refresh its its earnings. It updates its pack on the screen. I have to just wait for it, and that will do it in 1.5 minutes from now, and then we can take our short break. Sarge, it's okay. I will sell $3, then buy in higher. I don't understand what you're saying. Why would you sell and then buy higher? That doesn't make any sense. Good morning, Martyn. What do you think about RTX now? Too much of a backorder situation. RTX. I would need to look again, Mark Freya. I'd need to look again. I'm not going to guess. I need to look again at the numbers precisely. He have other program today, and he does the big questions to members only. That's right. Members only on Discord. And we all wait for XRP to go to $5 maybe this year. Yeah, I can see it. I can understand why that would happen. Right, we got 30 seconds to go, and SLB should update. Once SLB updates, I can then take a quick break, and I'll be back. I'll be back very quickly, just a quick restroom break, and we'll do the SLB earnings. And then straight after that, we have Discord, live one-on-one support, live training, live Q&A, all of that good stuff. All right, 20 seconds to go. I should get this screen update. All right, let me show you what I'm seeing. This is the SLB deck. At the moment, it's showing nothing. 15 minutes before the call, it should update. That's in 3, 2, 1, now. Oh, you see that? Always on time. How about that, folks? That's experience, right? I know how these things work now. Right, there's the SLB earnings. I'll be right back in a few minutes, give you a chance to tap the like button, go to the restroom as we get ready for the earnings call. Very, very exciting. What happened to subscribe? Where did it go? There we go. There you go. I'll see you back in a few minutes. Enjoy SLB earnings. It's a good one. Remember all the things I told you to look out for in the earnings in the 10 facts that someone said was boring and childish. Okay. All right. But anyway, it's how to make money. I'll see you back in just a few minutes. Don't go away. Thank you. Okay, good morning, good afternoon, good evening. It's now time. We're back for the SLB earnings. Just 7 minutes to go. We gave you all the 10 facts today to teach you and explain to you all about the market, what it really means, what the business means, and now we're going to cover oil. And this is important. And the technologies behind the oil. The men that own the picks are the ones that make the money, okay? That's what we're going to talk about right now. So let's get ready. We're having a fantastic day. We've got just 7 minutes to go. We expect the call to be on time. They are very good, and we'll be there in just a moment. If you just tuned in, tap the like button and consider subscribing. That would be absolutely fantastic. All right. So what we'll do now, we'll go live to Q&A. We'll answer some questions before we start. So let's have a little look. Let's see who is here. Good morning, Martyn. What do you think about that? I already answered that one. Let's have a look. The Sarge said, so do you guys watching here think XLP will go to sub 1 after peak this year? Most of my investors do believe that we're going to $1, yeah. And I have about nearly $1 million to buy it when it does. So anyway, it can be 1 or lower before up. Yes, Liz agrees with that as well. You can do your own research and watch even a few videos from 1 to 2 months ago. That's very kind, Liz. Here he is, Stephen Lewandowski, the oil baron, the man with the money in oil. We gave 10 facts today, Stephen. Did you get a chance to watch it? Did you watch the first part of the show today? See you later. Gotta have some nice new clothes. Shopping time. Oh, lovely. Make sure that you go and shop in one of the businesses that I own. Go and buy some Coca-Cola. All right, when you're out and about. Hey, Liz, when you're out and about today shopping in the mall, go and do some shopping and then have a break. Go and have a Coca-Cola. Take a picture of you drinking a can of Coke on your break. And then share it into Discord. Put it in the general chit chat. You out and about buying some stuff and having a can of Coke. So, that's what we want. That's what we want. See you later. Time to go, she said. Hello, Steve. Nice to have you here. Welcome back, All Logic. Thank you very much indeed. I appreciate that. That's very kind of you. All right, just 4.5 minutes to go. We're nearly there. Expect SLB to be on time. I'm pretty confident they'll be on time. It won't be I don't think it will be a long earnings call. They don't tend to be long on their calls, but we'll see. You never know. There's a lot to talk about in this sector at the moment, so you never know. It's possible we could have something happen today, but anyway, let's see how we go. All right. Anyway, let's get ready to rumble. We've got just 4 minutes to go. So we're in a holding pattern now. We're just waiting a few minutes for the call to begin. When the call begins, I'll go quiet and we'll just be listening in. All right. So you won't hear anything from me. I'll be listening in to hear what they have to say. And that is essentially how the call will go. All right. So let's get ready. Let's get ready to rumble. We have just 3 minutes. We're just waiting for a moment. Let's just give it some time. So 2.5 minutes to go. SLB is rallying into this. I've tried to find a Coke. Remember, doesn't have to be. They got loads of other brands, loads of other things. Yeah, loads. Just go and look on the back of a can and it'll probably say Coca-Cola. As long as it's a Coca-Cola brand, we don't mind. Anyway, should be fun. Right, 2 minutes to go. Who's excited? I'm excited. Let's get ready to rock and roll. Here we go. Just 2 minutes to go. I'm excited to hear what they have to say. How's the market doing? We're still going up. Our Coca-Cola has gone through the flipping roof. A little bit of profit taking now. That's nice. We like that. People taking profit. I'll be taking some profit around the 79.80. Might push that a bit further up, actually. I don't see any point selling it any earlier than that. But I want to aim now for $2,000 a month on dividends. So I'd like to hold as much as I possibly can and not sell. But anyway, that's another story. We got Coca-Cola earnings coming up soon, haven't we? By the way, we got 1 minute to go. If you are a member and you do a $20 super chat, you can book earnings. So for next week, you've got a couple of choices. In fact, you've got loads of choices. How long have we got? We've got 1 minute. If you are a member of the channel and you do $20, you can do Verizon. We got Domino's Pizza. All these, Celestica, Cadence, Amcor. I'm sharing them on the screen for you. No one has booked Coca-Cola yet. I cannot believe it. Do you want to book Coca-Cola? That's on Tuesday. Be first come, first serve. Spotify, UPS, BP, all sorts of stuff. After hours, we got Visa, Robinhood, Starbucks, Seagate, T-Mobile. No one's booked any of these yet. I think we got Robinhood booked. Yes, we got Robinhood booked. One of our members just booked it. Half a minute to go, 30 seconds to go. SoFi, all these, you can book any of these. Wednesday night, Amazon, Microsoft, Meta, Google. They're all open for grabs. It's up to you. You can choose where we go, what we do. Right, here we go. The earnings call is about to begin. Let me refresh my screens. Let me make sure we're all good. There's the audio. So I'm now going to put it on mute so you don't hear it, but I can hear it until it starts. Okay, we're all set. The SLB earnings is about to begin. When it does, we'll cover it live. We'll bring it all to you. We're learning about oil and technologies today, and a very interesting call. Gives us the state of the market, the economy, what they think about the war. This is important. This is the real money, the real power, not what Trump says.
My name is Megan, and I will be your conference
Here we go.
today, and would like to welcome everyone to the first quarter SLB earnings call. At this time, all participants are in a listen-only mode. After the speaker's remarks, there will be a Q&A session. If you would like to ask a question during this time, simply press star followed by the number 1 on your telephone keypad. You may remove yourself from the queue by pressing star 2. As a reminder, this call is being recorded. I will now turn the call over to James R. McDonald, Senior Vice President of Investor Relations and Industry Affairs. Please go ahead.
Thank you, Megan. Good morning, and welcome to the SLB First Quarter 2026 Earnings Conference Call. Today's call is being hosted from Houston, following our board meeting held earlier this week in Midland, Texas. Joining us on the call are Olivier Le Peuch, Chief Executive Officer, and Stéphane Biguet, Chief Financial Officer. Before we begin, I would like to remind all participants that some of the statements we will be making today are forward-looking. These matters involve risks and uncertainties that could cause our results to differ materially from those projected in these statements. For more information, please refer to our latest 10-K filing and other SEC filings, which can be found on our website. Our comments today also include non-GAAP financial measures. Additional details and reconciliations to the most directly comparable GAAP financial measures can be found in our first quarter earnings press release, which is on our website. With that, I will turn the call over to Olivier.
Thank you, James. Ladies and gentlemen, thank you for joining us. Before we begin, I would like to acknowledge our people, customers, and partners in the Middle East as they navigate this challenging and uncertain time. Our strong presence in the region dates back more than 85 years, and I'm proud of the resilience and unity demonstrated by our people as they work in lockstep for customers to safeguard our teams and assets while preparing for an eventual resumption of operations. I want to commend the entire SLB team for their continued care commitment, and support for one another and for our customers. Turning to today's call, I will start with our first quarter performance, followed by an update on the evolving situation in the Middle East and our outlook in the mid to long term. I will then cover our strategic initiatives, including ChampionX, digital, and data centers, and provide our thoughts for the second quarter. Stéphane will then take you through the financial and will open the line for your questions. Let's begin. It was a challenging start of the year, marked by severe disruption in the Middle East that impacted our first quarter with revenue and earnings. At the onset of the conflict, customer decisions to safeguard personnel and assets led to an initial wave of operational shutdowns. As the conflict persisted, further activity curtailments followed as a result of production shut-ins. The impact of these actions was most pronounced in Qatar due to force majeure and the suspension of offshore operations, and in Iraq due to the security conditions. We also experienced a more gradual impact from offshore rig shutdowns in other countries in the region, driven by a combination of security concerns and export capacity disruptions. In addition to the situation in the Middle East, unfavorable activity mix and higher costs further weighed on the quarter, most notably in OneSubsea. Looking across the divisions, production system and digital grew year-on-year, while reservoir performance and well construction declined mostly due to the impact of the conflict. In production systems, year-on-year revenue increased 23% due to the acquisition of ChampionX, which continued to deliver accretive growth. Additionally, we're on track to achieve our synergies target. On a pro forma basis, ChampionX also grew year-on-year, demonstrating the increasing demand in the production market. Turning to digital, revenue increased 9% year-on-year, driven by strong uptake in digital operations. Of note, automated footage drilled increased by 145% year-on-year as customers continue to adopt digital and AI-powered solutions to boost operational performance and efficiency. Also, data center solutions remained a bright spot, with 45% growth year-on-year. The momentum in this area continues, as you saw with our recent announcement to serve as the modular design partner for NVIDIA DSX AI factories. With our growing backlog, we remain on track to exit the year at a $1 billion run rate and expect the growth rate to accelerate in 2027. Overall, despite the challenges of the quarter, I'm pleased that the strategic decisions and portfolio actions that we are taking in digital, data center solutions, and production recovery are delivering results. I would like to express a big thank you to our teams in the Middle East and across the world who continue to deliver each day for our customers in this very dynamic environment. Now let me turn to how we expect the market to evolve as the conflict in the Middle East is resolved. Firstly, we anticipate that oil prices will settle at levels above the pre-conflict baseline. This reflects the new balance of liquid supply and demand, which has been significantly altered by more than 500 million barrels of lost production impact thus far. In this environment, energy security will remain at the forefront. We expect many countries to accelerate efforts to diversify supply, strengthen domestic resource development, and rebuild strategic and commercial inventories that have been drawn down during the conflict. In short, the fragility of the global energy complex we are witnessing today demonstrates the strategic importance and long-term value of oil and gas. Together, these dynamics are expected to support a constructive macro environment for upstream investment over the coming years. In the near term, activity will be led by efforts to restore production capacity across the Middle East for both oil and gas. While some countries executed orderly shut-ins and should be able to resume production within days or weeks, other areas, particularly where disruption were more abrupt, may require more gradual ramp-up, including additional well intervention. As a result, while the near-term recovery will be gradual and differ across countries, we see an upside in the outlook, barring demand destruction from the prolonged conflict. We are committed and ready to support our customers across the region. Beyond the region, we expect a broad-based response across both short and long-cycle investments. Short-cycle activity is likely to strengthen first, particularly in North America and parts of Latin America, where operators can respond quickly to higher prices. In addition, well intervention activities that can yield additional production will get a natural boost across all basins. At the same time, We expect renewed momentum in long-cycle developments, especially in offshore and deepwater markets, as customers look to secure durable, large-scale source of supply. This is also likely to improve certainty of offshore FID approvals, while also supporting increased exploration activity. As we can read in third-party reports, the FID pipeline in 2026 is strengthening and directionally adding over $100 billion total investment approval, visibly ahead of the last 2 years, and with another step up expected in 2027, with deepwater resources getting a large portion of these investments. Regionally, this presents opportunity in Africa, Asia, and Latin America. Africa represents one of the most compelling long-term opportunities, with a significant base of underdeveloped oil and gas resources. We expect portfolio allocation to shift more favorably towards this region over time. Asia will continue to prioritize access to gas, both onshore and offshore, as it works to diversify supply through development of national resources. And across Latin America, from Guyana to Brazil to Suriname, we see continued strength in deepwater developments, complemented by short-cycle growth in unconventional in Argentina. Separately, Venezuela continues to represent an exciting growth opportunity where we can expand on our existing operation in country. To conclude, in the context of energy security and the rebalancing of supply and demand, we see 3 primary drivers of increased investment over the coming years. First, the replenishment of depleted commercial inventories and strategic reserves. Second, the diversification of supply, including greater redundancy in sourcing. And third, increased emphasis on developing local resources to enhance long-term resilience. Our core business will benefit from these dynamics, supporting a positive outlook for SLB into 2027 and 2028. Let me now describe the additional strategic growth levers for SLB: production recovery, digital, and data centers. Starting with production recovery, this is becoming increasingly critical as the industry faces structural challenge in replacing reserves and sustaining production from existing assets. In this context, technology that enhance recovery and extend the life of mature fields are no longer optional, they are essential. Against the macro we just discussed, this is a defining moment for production recovery. This technology has the potential to shape the next stage of recovery in unconventional assets and create a step change in production enhancements in every basin and resource play, from deepwater to conventional, and from gas to oil. With ChampionX, we are uniquely positioned to lead in this space by combining production chemistry, artificial lift, digital capability, and subsurface domain expertise. We're helping customers unlock additional barrels from existing reservoirs in a capital-efficient manner. This is particularly relevant as operators look to maximize recovery, improve returns, and bring incremental supply to market in support of energy security. We hosted our first production recovery summit in Houston a couple of weeks ago, and we are very pleased with the engagement for our customers from every region across the world. They increasingly recognize the potential of this domain and the opportunities present to unlock growth for the industry. Turning to digital, this business continues to build strong momentum and is a key driver of both differentiation and long-term value creation for SLB. While still a relatively small portion of our revenue today, its impact extends well beyond its size. Our approach is grounded in domain expertise, where AI, data, and software are integrated into our platform and workflow to deliver measurable performance outcomes. This is not about standalone tools. It is about embedding intelligence across the full life cycle of reservoir development and production. Our teams continue to make exciting developments, particularly in agentic AI. And as the number of use cases increase, the value of this technology are proven in the field, we anticipate increased adoption. Over time, we expect digital to become an increasingly important lever for growth, both as standalone business and as an enabler across our broader portfolio. And we're excited to share more about this business during our Digital Investor Day later in June. Finally, data centers represent a new and rapidly expanding opportunity for SLB. Building on our core strengths in engineering, manufacturing, and project execution, we're extending our scope of modular infrastructure solutions to support the accelerating demand for AI and digital capacity. In less than 2 years, we have established our right to play in this industry, proven by our manufacturing know-how and supply chain capabilities. We are building on this expertise to support design engineering and performance optimization of the data center build-out. And we are currently scaling the business through expanded capacity, deepening partnerships, and selective international growth. While still at an early stage, this business is already demonstrating characteristics we are looking for: capital-light growth, strong demand visibility, and a clear path to becoming a meaningful contributor to earnings over time. Looking ahead, we see additional upside through opportunities such as thermal management, decarbonized power, and serving as a system integrator. These are areas where our capability can further differentiate offering and expand our addressable market. We also continue to assess potential opportunities to accelerate this trajectory through targeted M&A. Taken together, these three areas, production recovery, digital, and data center solutions, reflect how we are evolving our portfolio toward higher return, technology-driven, and less cyclical growth. They are complementary, scalable, and aligned with the long-term trends shaping both energy system and digital infrastructure. Let me now share our view on how the second quarter may unfold. First, it is uncertain how long geopolitical disruption will last and how the recovery in the Middle East will unfold. At the same time, we are facing higher procurement and logistics costs driven by the conflict. As a result, it is challenging to provide precise guidance for this quarter. However, there is a scenario where operational disruption in the region persists through the middle of the second quarter and then begin to gradually ease. Under this assumption, we estimate that the sequential revenue and earnings decline in the Middle East will be fully offset by all other international markets combined, where we anticipate mid to high single-digit revenue growth with improved margins. Meanwhile, North America revenue is expected to be flat sequentially. By division, under the Middle East scenario I just highlighted, digital and production system will grow globally, while reservoir performance and well construction will decline globally. I will now turn the call over to Stéphane to discuss our financial results in more detail.
Thank you, Olivier, and good morning, ladies and gentlemen. First quarter earnings per share, excluding charges and credits, was 52 cents. This represents a decrease of 20 cents when compared to the first quarter of last year. During the quarter, we recorded 2 cents of merger and integration charges, primarily related to the ChampionX transaction. Overall, our first quarter global revenue of $8.7 billion increased 3% year-on-year. Excluding the impact of the ChampionX acquisition in the third quarter last year, revenue declined by $607 million, or 7% year-on-year. When compared to the fourth quarter of last year, revenue fell by just over $1 billion, or 10.5%. This decline was approximately 200 basis points, or about $200 million, higher than we expected at the time of our last earnings call in January. This was primarily due to the impact of the conflict in the Middle East, as we experienced operational disruptions throughout the month of March. Company-wide adjusted EBITDA margin for the first quarter was 20.3%, down 346 basis points year-on-year. Margins were negatively affected by high decrementals on the Middle East revenue impact. We did not make any material adjustment to our cost base during the quarter, as our immediate focus was the protection of our people and preserving operational capacity for the expected future rebound in activity. We also incurred additional logistics and materials costs as a result of supply chain disruptions due to the conflict. Beyond the effect of the Middle East conflict, first quarter margins were impacted year-on-year by increased tariffs, project mix, and higher costs in OneSubsea, as well as pricing headwinds in select markets, particularly in well construction. Let me now go through the first quarter results for each division. First quarter digital revenue of $640 million increased 9% year-on-year, primarily driven by 87% growth in digital operations. This was supported by increased digital services adoption and new technology introduction, as well as the acquisition of ChampionX. Notably, annual recurring revenue for the division stood at 1.02 billion at the end of the first quarter, representing year-on-year growth of 15%. Digital pre-tax operating margins of 20.9% was essentially flat year-on-year. However, adjusted EBITDA margin of 26.1% declined 473 basis points due to lower amortization relating to exploration data as a result of the mix of surveys sold during the quarter. As you know, digital margins are historically lowest in the first quarter due to seasonality and steadily increase throughout the year, reaching their highest level in the fourth quarter, as evidenced by last quarter's results. This trend will continue, and consequently, we expect to achieve full-year digital adjusted EBITDA margin that is at least equivalent to last year's level of 35%. Reservoir performance revenue of 1.6 billion decreased 6% year-on-year, while pre-tax operating margin of 16.1% decreased 47 basis points. These decreases were due to lower stimulation and intervention activity, primarily as a result of the disruptions in the Middle East. Well construction revenue of 2.8 billion decreased 6% year-on-year, primarily from lower activity due to the disruptions in the Middle East, partially offset by higher offshore drilling activity in Europe and Africa, Latin America, and North America. Pre-tax operating margins of 15.2% contracted 463 basis points year-on-year due to lower profitability on account of the Middle East conflict, as well as pricing headwinds in select markets. Finally, production systems revenue of 3.5 billion increased 23% year-on-year. Excluding the impact of the ChampionX acquisition, first quarter revenue decreased 6% year-on-year. On a pro forma basis, revenue from the ChampionX production chemicals and artificial lift businesses grew 2% compared to the first quarter of 2025. This strong ChampionX performance was offset by the impact of the Middle East conflict, lower OneSubsea revenue, and, independent of the conflict, lower product deliveries in Saudi Arabia. Production systems pre-tax operating margins of 14.2% declined 240 basis points year-on-year due to lower profitability in surface production systems, completions, and OneSubsea. As it specifically relates to OneSubsea, pre-tax margin in the first quarter was 14.4% compared to 18.1% in the first quarter of 2025. Margins were affected by the concurrent wind down of several large programs and the initiation of new projects with high startup costs. OneSubsea margins are expected to increase over the remainder of the year. ChampionX partially offset those effects as we continue to make progress with our synergy realization. As a result, ChampionX margins this quarter were higher than in both Q4 and Q1 of last year and were accretive to both production systems and total SLB's margins. Now turning to our liquidity. Our net debt increased 797 million sequentially to 8.2 billion. During the quarter, we generated 487 million of cash flow from operations. Free cash flow was slightly negative at 23 million on account of the payment of annual employee incentives and the seasonal increase in working capital that we typically experience in the first quarter. This was compounded this year by delayed collections in the Middle East stemming from the conflict. We expect our cash flow generation to follow our historical pattern, with free cash flow gradually increasing throughout the year, with the majority coming in the second half. Capital investments, inclusive of CapEx and investments in APS projects and exploration data, were 510 million in the first quarter. For the full year, we are still expecting capital investments to be approximately 2.5 billion. During the quarter, we repurchased 451 million of our stock, and we still expect to repurchase a minimum of 2.4 billion for the full year, in line with 2025. As a reminder, we are targeting to return more than 4 billion to our shareholders in 2026 through a combination of dividends and stock buybacks. Before I wrap up, let me come back to our second quarter outlook and more specifically to the Middle East. I would first like to clarify that the Middle East represented approximately 70% of our Middle East and Asia business in the first quarter. Under the specific scenario that Olivier highlighted earlier, where operational disruption in the region continues until the middle of the quarter and then starts to alleviate, we estimate that it would negatively impact our second quarter earnings per share by an incremental 6 to 8 cents when compared to the first quarter. This is the result of lost revenue, as well as higher procurement and logistics costs associated with the conflict. I will now turn the conference call back to Olivier.
Thank you, Stéphane. I believe we are now ready for taking your questions.
We will now begin the Q&A session. If you would like to ask a question, please press star followed by the number 1 on your telephone keypad. Your first question comes
If you
from
could
the
tap
line
the
of
like button,
Dave
guys,
Anderson
and
with
consider
Barclays.
subscribing,
Your
it
line
really
is
helps
open.
the channel. Thank you very much.
Hi, good morning, Olivier. How are you?
Morning, Dave. Morning, Dave. Morning.
So looking past some of the near-term disruptions, I was wondering if you could expand a bit more on your views on how the investment cycle has changed. You mentioned a broad-based recovery in 27 and 28. Is that predicated on oil prices being structurally higher now? And can you also comment on kind of which end markets that you see the most upside in as you sit here today?
I think there are multiple reasons why I think we believe that the industry will benefit from an uptick in investment. First, indeed, I think we are projecting that the commodity price will be higher after this than they were before. But more importantly, I think the significant impairment of the supply-demand balance, I think, has created the need for replenishing these inventories, replenishing the structural reserve, and also have heightened the risk of energy security. And hence, as a consequence of this, there will be multiple factors that will play into an increased investment outlook. Firstly, to replenish the inventory, and the structural reserve will supplement the natural demand in oil and gas. Secondly, the energy security will draw national decision to reinvest into local resource and to diversify the source of supply, including creating some redundancy if and as necessary, and clearly maintaining in the future higher inventory stock spare to prevent future shock of supply. So I believe that these are aligning with trends that are already in play, that were already indicating that offshore was set for rebound as we exit 2026 into 2027. So I believe that this combination will both affect the short cycle impact in a shorter time and the long cycle at scale into 27 and 28. So we are set, in our opinion, for an uptick into the cycle strengths going forward.
So, Olivier, you had talked about deep water looking particularly attractive in that outlook. Obviously, that's part of the long cycle story there. Can you talk about where you see the most upside in terms of SLB's business? Is it more on the well construction and reservoir analysis side? Could OneSubsea be a big driver? Just trying to think about through the different parts of your business that would be most impacted.
So first, I think we are confident that offshore, I think, as being very attractive economically now, and I think where the large resources are set for operator to unlock and develop going forward, I think is the reason why we're seeing this uptick into the FID pipeline and the prediction by many reports saying that this will at scale exceed what we have seen in the last couple of years. So the macro assets are very positive for deep water, and this is true across, I would be very clear, across Africa, Asia, East Asia, and Americas for different reasons. Africa, as I stated in my remarks, I think is set to be one of the most beneficiary for this, as it has vast undeveloped still resource, both oil and gas on the west and on the east, and clearly set to be developed. And this is where we see potential acceleration of FID in the coming quarters. Americas is very strong from Brazil to Gulf of America, and I believe this will continue to be a play, particularly in Central America, that we see support, and Asia because of gas. We see a double down on the development of gas, a deep water resource, and we have seen a lot of development happening these days in Indonesia. And you have seen some of the announcements we have made earlier today in the earnings press release, and with subsea being awarded in Malaysia and in South China Sea, a critical award. So I believe that core at large will benefit from this rebound. We have strong market position across the different divisions, but yes, indeed, subsea. We expect one subsea to benefit at scale, and as guided historically previously, I think we expect one subsea to benefit, to have a higher booking this year than last year visibly, and to then have a growth trajectory in 26 and into 27 and 28 as we see the scale of this offshore cycle developing.
Thank you. Your next question comes from the line of James West with Melius Research. Your line is open.
Hey, good morning, Olivier, Stephane.
Good morning, James.
Olivier, the Middle East is your backyard. You guys have owned that market for a century or more. You don't leave conflict zones, but when conflicts happen, and you're always there for the recovery. As you think about the recovery and how it could unfold, and I know you made some comments in your prepared remarks about this, but as you talk to the customers, what do they want to do? What do they need you for initially? And how do you think the kind of momentum builds, assuming that the conflict resolves in the timeline that you kind of laid out and others have laid out?
First, I think to be clear, I think we are working in lockstep with our customers every day, every week. We continue to work closely with them to understand as they are contemplating all options for recovery, and I continue to observe the outcome of the discussion and the geopolitical event happening on the back, and we stand ready. So I think we are more in standby as we speak, but yes, multiple scenarios are being considered, and there are some countries where the resumption of operation will be relatively fast and could turn into days and weeks, and there are a country as facility and or a field have been stopped and shutting abruptly, where we'll be needing to intervene on those fields. Hence, it will be an initial phase of assessment, initial phase of intervention before the production can come back to full capacity. And there are country or region or not region, but zone in the region where security will remain a concern and will delay further the recovery. So it's a gradual recovery, but yes, we are working very closely with customers, both to mobilize equipment or resource, and also to anticipate the reservoir consequence and the type of services they need to provide as the conflict start to be stabilizing and as the customer have the confidence to remobilize. So we see long-term clear upside in the region, and we see that some countries will actually use it to catch up and maybe expand their capacity to recover from the market share and the production loss during this period.
Got it. Okay, very, very helpful. And then maybe a quick follow-up, understanding that most energy countries and of course companies and countries want to diversify supplies now. Do you see more of your customers that are Middle East based, maybe stepping outside of the region? They've already started to do that a little bit, but stepping outside more post conflict.
No, I think that generally, operators will continue to diversify their options across the entire world, and I think there are plenty of basins that still stand undeveloped. And I think I highlighted Africa. I think there's a lot of oil and gas resources that are set to be developed, and I think the fiscal terms and the security conditions have improved actually in the region and will make it very critical. But the Middle East remains a low-cost barrel and low-cost gas country at scale, and hence it will continue to attract investment as well. And I think the national resource holder in the region will continue to develop at scale the resource. So we see a mix, but I think beneficiary of this, and I think maybe additional investment will go into Africa, into Americas offshore, into Asia deep water, and into production recovery across all regions, we believe, because this is where the fastest incremental barrel can come from.
Thank you. Your next question comes from the line of Steve Richardson with Evercore ISI. Your line is open.
Good morning.
Morning, Steve.
I was wondering if we could talk a little bit about digital. You made this acquisition with S&P, and from what we understand, this is a largely U.S.-centric data business and data set. So can you talk about what the longer-term vision is there, and be sure to hit on how and if that's an enabler of some of the other things you're doing in the broader business outside of digital?
Yeah, absolutely. As described in our press release this morning, I think we have come to an agreement with S&P Global Energy to acquire actually their upstream petrotechnical software suite, not their data. And this is mostly deployed in North America with independent and with workflows that are quite specific to uncommercial markets. So this is highly complementary to the offering we have. And as we go forward, this will complement our offering in North America, give us the opportunity to expand the reach of this petrotechnical workflow solution internationally for the ivory markets. And also will help us to maybe expand and address the next challenge into the unconventional development and recovery, and use this new software suite to complement what we have and add sounds, add domain, and create and unlock new unconventional workflow into North America. So it give us a broader market access. It give us a tool that is fit for the unconventional market where we're not having the same offering today. And this just expands our product suite into the domain. Now, separately, as you may have seen also into the earnings press release announcement, we have entered an agreement to pursue a strategic partnership with S&P Global Energy with AI, giving an opportunity to use the power of Lumi and Tela, including specific domain foundation models that we build using the data sets, the global data sets of S&P Global Energy, so that we together provide our customers with unique insights through AI, applying AI capability, applying our domain and our domain foundation model, our capability on the full data sets of S&P Global Energy. So that's unique, and I think that will be very, very appreciated by customers and benefit the customer greatly going forward.
That's great. And I suspect we'll hear much more about that at the Analyst Day in June. I'm wondering if you could give us a brief update on the data center business and your outlook there in terms of securing additional customers, your commercial approaches there, and expectations for the balance of the year relative to what you talked about a quarter ago. Thanks.
Yeah, I think you have seen we continue to progress. I think we continue to reiterate our ambition and our goal that we'll reach or exceed the $1 billion run rate as we close this year. And actually, we have made great progress this quarter to secure additional customers that give us further visibility into the demand for our capacity in 2027 and 2028. And as indicated, developing more growth and scaling more than what I've mentioned as an exit rate going forward. So you have seen one announcement on NVIDIA that has chosen us as selected us as their design partner for the DSX AI factory. It means a lot. It means that we have been selected amongst others as a partner they believe they can trust to develop this modular infrastructure solution for DSX center, large-scale future Rubin Vera solution center that will need to be scaled fast, and we will add our capability to build this site and manufacture this equipment off-site and bring this modular infrastructure to this NVIDIA customer in the future. So that's great, and I think you will see additional announcement coming that will show the breadth of our customer reach and the scale of our operation going forward. So we are very pleased with the progress, and this will continue to grow in 26 and clearly at scale in 27.
Thank you. Your next question comes from the line of Arun Jayaram with JP Morgan. Your line is open.
Yeah, good morning. Olivier, production recovery seems to be an important theme this morning. I was wondering if you could highlight some of the industrial and technical challenges in restoring production, which is offline in the Middle East. And do you think that, assuming that, we get to an improvement in the situation in the Middle East in 2Q, could this be a driver of SLB's second half 26 results?
So firstly, I will not be commenting on behalf of our customers in the Middle East as they go through the assessment of their facilities. Some of them, as you know, have been damaged by this crisis. I will more comment on the engagement, collaboration, and close partnership we have with our customers to prepare for, and as they are ready to mobilize, as they believe the security concerns are no more present. And I think first and foremost, as I said, the shutting were done orderly, and I think this could just be a resumption of operation. That will just be redeployment of resource, remobilization of resource, and I think with no necessarily significant impact in short term. Others will need well intervention activity, and that's where we have an upside, and we'll want to work with our customers to see how we can help restore the production and add and use the production recovery technology set to help us regain the capacity production that was pre-conflict. So long term, as we said earlier, we see more upside. I think once this resumption of operation gradually resume throughout the following months and possibly quarter for some country, we see that there is an upside into the desire for some country there to uplift their capacity and to participate to the replenishment of the depleted inventory and strategic reserve. So we are seeing gradual intervention first, production recovery focus, and then large-scale development and expansion of capacity for some country.
Great. I have a follow-up to Stephen's question on digital. If I look at year-over-year trends, Olivier, your revenue was up 9%, but your margins fell by 473 basis points. So I wonder if you could talk about what you saw on the margin front and perhaps the recovery potential for digital margins over the balance of the year.
I'll take this question, Arun, Stephen. So as you know, we closed last year in digital with full year EBITDA margin of 35% and the pre-tax operating margins of 28%. There's a bit of a distinction between the pre-tax margin and the EBITDA here. We started 2026 with pre-tax margin of just about 21%, which is essentially in line with where we started in the first quarter of 2025. EBITDA margins, however, were indeed lower, and this is exclusively due to lower amortization from the mix of exploration data that we sold during the quarter. So if you step back anyway, as I said earlier, the first quarter of the year is typically the lowest for digital margin. So if you look at where we started, same as last year, and we fully expect to see the same pattern we have seen over the years. And we will reach the highest margins in the fourth quarter, and it is clearly our ambition to deliver the total EBITDA margins from digital of at least 35% this year as well. So this is the choppiness of quarterly movements that it's not a concern to us.
Thank you. Your next question comes from the line of Scott Gruber with Citi Research. Your line is open.
Yes, good morning, Olivier and Stefan. I got a couple more questions on digital. Good morning. So in a world where code writing becomes easier and more commoditized, can you speak to the resilience of the value add of your digital portfolio? And as you kind of take moves to shape the portfolio like you've done with the S&P acquisition, how you think about kind of expanding that value add and enhancing that resilience?
No, I think the customer are accelerating the adoption of digital because they believe that no matter what the cycle is turning into, a highly favorable cycle or challenging cycle, they believe they need to differentiate. They need to add and extract efficiency, productivity in the data science and planning workflow, operational performance and efficiency into the drilling and into the production and recovery space. And they have seen that the digital capability, and you can see it by the adoption of digital operation growing at very nicely year on year, and is driven by drilling, is driven by production, operation workflow, where customers are adopting AI solution, adopting software solution that can transform the performance of drilling operation, like drilling automation, can transform production workflow to render ESPs autonomous. And I think this capability will be looked for every customer. So every use case we see is resonating across customers in every basin. And I think we see this not only resilience, we see this as a long-term tail of any cycle and something that digital will continue to have a tailwind in our industry because we have data like no other industry has. We have scientists and engineers that love to play with data, and we have AI that is starting to come at play as a catalyst to become an X factor, if you like, to unlock productivity. So we are, I think, unique in our capability. We have the domain knowledge that is deep, and we have the platform that can help scale this AI capability going forward. So we feel that I think it is the right time for the industry to adopt AI at scale. We think that we have the platform, we have the deep domain, and the first use case that are starting to be realized in recently, and the power of agentic in our industry will only reinforce this growth opportunity, and it's not only resilience, it's growth going forward. And we show more of this during our event in the Digital Investor Forum.
I definitely look forward to it. And a follow-up here, just with an outlook for higher oil prices, at least over the medium term, how does that impact the digital business? I assume your seismic sales, could improve. How meaningful could that be? And then, kind of more importantly, would you anticipate customers taking some of this excess cash that they're generating and spend it, on more software, more applications to get a bigger boost, for their own internal efficiency?
Yeah, obviously, when the commodity prices are high, and I think the customer have more optionality with their discretionary spend, they use it in two domains. They use it in digital, and they accelerate exploration. And I think we foresee that, and we have seen it, and we have seen signal that exploration is coming back. We have seen some announcements of some company reinvesting in exploration at scale because they believe they want to secure reserve to participate in long-term energy security. And at the same time, yes, they use this discretionary spend smartly and using this to on occasion to buy data sets to accelerate the exploration, and will benefit from that, but also participate to more pilots and then make decision faster to accelerate their platform software deployment in their organization.
Thank you. Your next question will go to the line of Sebastian Erskine with Rothschild Company and Redburn. Sebastian, your line is open.
Hi, good morning.
Good morning.
Gentlemen, thanks for taking my questions. Good morning. I just want to start on SLB OneSubsea. It's really one of the jewels in the SLB crown. You guided at full year 25 results for $9 billion in sort of order intake over the next 2 years. But I wonder if you could give perhaps some outlook on the margin expansion potential within the OneSubsea business, particularly with comparisons to the sort of broader offshore E&C universe. Is there more room for integration with the rest of your portfolio or further efficiencies related to the existing kind of Aker Subsea business? Any color on the margin outlook for OneSubsea?
Yeah, sure, Sebastian. So you have noticed that actually for the first time we gave you our margins for in OneSubsea for the first quarter. Unfortunately, they were not as brilliant this quarter, but these are temporary effects due to the timing of project completions and startups. So you've seen where the margins were in the same quarter of last year, pre-tax margins of 18%, which means EBITDA margins very close to 20%. So this is what we expect from this business over the cycle at the minimum. And even though we started on a rough note in the first quarter, we expect the margins to normalize in the coming quarters, and hopefully on the back of a backlog that is increasing year on year. We are actually up 5% year on year on the backlog. We have better visibility on the growth going forward and potential margins at least.
Yeah, I just want to add a couple of things.
Yeah, sure. Thank you.
Yes, Sebastian, production recovery. I think I just want to add that obviously Subsea as a domain of deep water, I think is essential for our customers, and production recovery plays a great role. And I think we have a unique processing subsea floor processing portfolio. We have seen one more announcement that we are continuing to renovate and to enhance the project. We have Geographic with Equinor in Norway, and we have done one acquisition that complements offering to help us better participate into the intervention world of deepwater subsea. So we believe indeed that our production recovery strategy and the connection with our over core capability is essential going forward, as it will help customers leverage OneSubsea to enhance the production of existing fields and provide more lateral field services, as we call it, including digital capability to this subsea installation. So it's both on the E&C cycle and then on the lateral field services long term that will benefit.
Really appreciate the color there. And then just to follow up, I think Olivier in the prepared remarks you mentioned towards the end of the data center solution section, you were kind of considering potential further M&A following the closure or the announcement of the S&P Global deal. What areas are you seeking to add in terms of your portfolio? Any color on that would be helpful.
Yeah, we are looking at everything where we believe that we could build a portfolio that give us a more technology anchor into our portfolio, so that as we build more modular infrastructure solution across the full space, thermal management is one that obviously come to mind. And we're looking at opportunity we believe could complement the offering we have and the go-to-market that we have created and right of play we have created into the space.
Thank you. Your next question will go to the line of Marc Bianchi with TD Cowen. Your line is open.
Hi. Thank you very much. I just first wanted to quickly clarify on the outlook here for second quarter. So you're essentially saying that results will be the same as first quarter, and there's sort of a 6 to 8 cent incremental hit from Middle East that's being offset elsewhere. Is that the message you're trying to deliver here?
Yeah, no, that's a good summary, Mark. Just to be clear, this is under the specific scenario that we highlighted, where the operational disruptions start to ease more or less at the middle of the quarter and then gradually recover. So in this scenario, we can offset the negative impact of 6 to 8 cents incremental effect of Middle East with the rest of the international operations.
Yeah. Great. Thanks for that, Stefan. The other question I had, going back to OneSubsea and sort of the $9 billion of awards over 26 and 27, is given sort of the outlook here, do you see upside to that now? And how are you sort of thinking about your competitive positioning. We hear a lot from your other competitor about their integrated capabilities. Can you kind of talk about how you see OneSubsea positioned from a competitive perspective?
So first, I think commenting on the cycle, I think the more this dynamic plays favorably as the conflict ends, the more we believe that the investment will be attractive into the deepwater market, as it is a majority actually of what we foresee as FID in 27 and 28. And hence, the more it will play into the size of the addressable market. Hence, if FID are firmed up, if not accelerated in 27 or even in 26, this will give us a potential to outperform the guidance we have given. So yes, now on the position, we feel very good with the position we have, extremely good. We have a partner with a Subsea 7 gave us when and as customer ask for integrated offering, the integrated capability to deliver, and we have done it at scale with many customers. We feel that we have developed partnership and collaborative engagement with several customers that have led us to be working jointly with our customers to help and provide support to increase and improve the design of the subsea architecture and unlock FID. And this is true with the partner we have in Equinor, with BP. And we believe that we have unique portfolio with subsea processing that is having no match on the market. And you have seen an announcement today, and you will continue to see a pipeline of projects that will make it pretty unique in the marketplace. You have seen the Ormen Lange subsea gas compression that unlock a new level of recovery for the field of Ormen Lange in Norway. You have seen the additional announcement we did today on the Gulfax project, where we'll rework with our customer to make sure that we extend the life and improve the performance of this capacity of subsea processing so that it unlocks next level of recovery. So yes, we feel good about our integration capability. We feel good about the pipeline of that you have seen. We were awarded in Malaysia, in South China Sea, in Suriname, and in Norway, announced today. And we'll continue to have a pipeline of exciting projects going forward across the basin I mentioned earlier, Americas, Asia, and Africa. So we are pleased with the OneSubsea progress and we continue to support them fully.
Thank you. Your last question comes from the line of Neil Mehta with Goldman Sachs. Your line is open.
Thanks so much. Morning, my friend. You guys talked a lot about some of the cost impacts that you're seeing in the Middle East and how that's impacting margins. And I think we all understand at a conceptual level things like freight, but can you just kind of give us some of the line items that might be causing the pressure point and help us understand, what are some of the specific items that are pressure points?
Sure, we can do that. So clearly from the situation in the Middle East, it introduced quite some strain on supply chain networks locally, but with ripple effects in other places in the world. So probably the line item that's the most impacted is logistics and transportation costs, clearly. Coming next is raw materials, those which are derived from petroleum products, of course, and that would also include chemicals. So it's raw materials and logistics mostly. So this has impacted our margins in the first quarter, and it will linger for a while. Now we are not going to let just that hit our cost. We have mobilized our commercial organization to recover some of these increased costs, and we are activating inflation pass-through clauses that we have in our contracts. And if we don't, we are in direct negotiations with both our suppliers and our customers to offset these effects. So we are kind of used to these spikes in costs coming from inflation, and we try to recover as much as we can.
And my last question, it's been a couple months now that ChampionX has officially been in the SLB portfolio. Just any observations about what it's bringing to the table here and how you've been able to integrate the system into the broader company?
First, I think I will reiterate the results part of the ChampionX addition to our portfolio. As Stéphane highlighted, I think ChampionX has been as a portfolio accretive to the company in the first quarter, and I think it has been growing year-on-year and expanding margin year-on-year. Second, I will come back to the 3 days we spent with our board in Midland. I think it was a pleasure to see in action our ChampionX ex-ChampionX employee integrating fully in a port to pipeline, if you like, a tour that we made with our customer, with our board directors to showcase our fit for basin technology in the Permian. Highly integrated, already getting pulled through or getting synergy, revenue synergy and technology synergy that customer are appreciative. The second highlight of this trip was a meeting of our customers. We hosted many customers with our board of directors in Midland, and I think it was a pleasure to get feedback, very direct and transparent feedback from our customer. They were very pleased with the integration progress, and they have seen the light of the potential that ChampionX with the greater SLB can bring to their operation in the Permian. So we are seeing the benefits on the financial results. We are seeing an exciting opportunity for operational recovery, as we commented on a summit that we hosted lately. And we see the enthusiasm of our team, starting with the ChampionX employees and the customers that are appreciative and recognize this is something unique that we have and something that can unlock the potential of operational recovery, partly in unconventional, but in all of our basins in the world as well.
Thank you. I will now turn the call over to SLB for closing comments.
So thank you very much. So ladies and gentlemen, as we conclude today's call, I would like to leave you with the following reflection. First, while recent events have created near-term disruption, they have also reinforced the need for secure and reliable energy, which will support oil price above pre-conflict levels and create an enduring backdrop for oil and gas investment. Second, production recovery, digital and data center solutions are creating the foundation for accelerated growth. And finally, I want to take the moment to recognize that this year marks 100 years of SLB. As we celebrate this milestone, I'm proud that we are not only honoring an extraordinary legacy, but also building the foundation for the next century of innovation, performance, and leadership. With this, I will conclude today's call. Thank you all for joining.
This concludes today's.
There we go. There is the SLB earnings. Now then, what we're going to do is wrap this up. I've got a gold member joining me in a few moments' time. Paul, if you're a gold member of the channel, a YouTube member, you get to call me once a month. We have an hour together, personal private call, not financial advice, just having a conversation. That's happening now. So stand by, Paul. I believe you're watching the show. You can call me in a second and we'll go into that. Everybody that's watching right now, I'm going to send you over to the extra channel where we're going to give you a great call, by the way, a really, really great call from SLB. I'm going to give you, it automatically take you there, but here is the link to extra channel. And what it will do is it will replay what you've missed this morning, all the 10 facts around the business, so you can understand what the business is actually about. So let me show you what I'm going to do. There is Pete Hesketh that's saying there, this is what we do. We restream today's show so you don't miss anything. That way you get everything and people want to watch it live and chat and comment. So watch the screen. I now go over to the extra channel and I will do this now. Take this to the beginning. Take it back to the beginning. There we go. Couple of seconds. There we go. Okay, you'll see it change on the screen. Now, what the purpose of this is, Bloomberg and other channels, what they do is they replay you stream a video. Same video the last 2 years. Bloody ridiculous. What we do is we play you today's stream because other people around the world in different time zones will tune in at different times to watch. So the purpose of this is you can see what you've missed. You get everything here. with different people joining in at different time zones. I'll be in the chat. I can talk to you. It's a way to communicate with me. You can watch for free, listen for free. If you want to chat, it's 99 cents. We put a membership on it, so we stop all the bots, the trolls, and the idiots coming in. So because it's manned, it's not manned. 24 hours a day this is on. So you can get all the information from SLB, a deep dive on SLB. You can go and watch that now. So I've given you the link. Go and watch that now, and you can see that, and I'll be in the chat with you as well. I'm now going to speak to my gold member, and after the gold call, I will be on Discord for our first stage event of the day. That's it from me. So thank you very much indeed. You've got the link. It will automatically take you there, and enjoy everything around SLB today. So as much now you've heard the call, put the dots together, and you can make an informed decision whether it's a good stock or not, or a good business, I should say. All right, that's it from me. I'll see you all in a few minutes. I'll see you on Extra, and I'll see you in Discord after I've had my gold member call this morning. That's it from me. As always, until next time, take care of yourselves and each other. Bye-bye for now.